All right, good late night. All right, I'm gonna make this video as quick as possible, simply because I don't want to go through all the different things. So we can see here, we're going to talk about how this is definitely a possible bottom here. That's the trend line. We just double bounced right off of it, right? One of the biggest tells for this, we're going to go through the very specific things, is the 4-hour MACD, is that when you explode into the zero line here, and then you fail, and then we exploded into it, but this one was different than that one, and then we failed, and then we explode into it, and then we fail. It's very, very, very difficult for waves to do that very specific move a third time, a second, third, or fourth time. This move, I suspected to be different because it felt different. It's the Fed spoke over here, and instead of dropping here, we actually spiked on it. But if you know anything about waves, this is how waves work, and this is how waves work. Either if you're bullish here, you would go, or you're bullish here, you activate, but then you're in resistance, so you need to go retest, or you hit a trend line and you got rejected, but you're bullish, right? It's just the way waves work. So either we could have went through it, or we hit it and you need to get kicked back one last time. You'll ever see very, very violent downtrends like this. You'll notice how when you get towards the bottom of the trend, which would be 2, 3, or 4 rejections, the third or fourth rejection, you end up getting this really violent move up into a trend line and a violent rejection. Those 80-90% of the time, if they hold this bottom here, will end up going back up through this, if it holds, and it looks like it is. So this is looking like one of those moves where it did exactly that. Needed to get rejected, was at resistance. Everyone was basically saying this is where we're going to sell. And we ended up getting the worst day of the year, right? Dow went down like 1,200 points, something like that. So this is the type of move where if you're a bear, you're forever a bear. Like, that's it. You're a bear. You're going to stay a bear. It doesn't matter if we rally back up. We've seen it before, right? We rallied up and now we crashed back down. So they're not going to trust this move at all. And they won't trust it all the way up. And it's a perfect scenario for a bottom. Now, the importance of this fails, fails, fails. But this had a neutral print here. This is very, very, very specific, right? It's a moment in time where there's neutral momentum. You can see it on the Qs. It happened on a bunch of different ETFs and indexes. It's the bottom momentum, neutral prints. We always talk about it. They either go straight up or straight down, where they start the new trend, or in more rare cases, you'll get a quick kickback and then the new trend starts. Similarly to this. So here you get the neutral, you get the quick kickback, and then you get one sine wave. Looks terrible, feels terrible, but it's just one sine wave. Goes up, explodes above the zero line, starts the momentum, comes back down, clicks last night, and starts to go. It's very, very, very strong, and the way you can see that this is bullish, and it's not just, okay, it's a whatever move, is UVXY. UVXY. Look at UVXY today. So we said last night, UVXY is either going to explode higher and the market will flash crash, which I just didn't see. You have to respect the move, but I again and again and again, I didn't see the move. I don't see it because it will structurally change the whole stock market, and I don't see that move right now. So you have massive amount of people buying into this towards the top, and it reversed. S&P went sideways all day. Why would that happen? Down 0.61%. Then you have most people on the internet not knowing the difference between the correlation between UVXY and S&P. It's very, very, very important. The strength of the move on the S&P was very bullish today. UVXY got completely crushed. Huge red candles engulfing the entire time. Dropped at the end of the day and dropped at the start of the day down and to the right. And now we're up 0.8% after hours, after this close right here, right? So this is extremely bullish. This ends up happening when you're making a very strong base. So the strength of the move, if you're catching a lot of weight, you end up getting this real strong type of coil move. which represents UVXY doing this, right? Most people don't understand that, and most people won't. Almost no one understands that. Why would UVXY do that? Now it's, look how bearish that is. From huge bullish to huge bearish. That is very rare. That is very rare. Huge bullish to huge bearish. There's a very specific effect going on here. This never should have ran up here. Insanely violent retest of the gap and this trend. So what I expect to see is that when we said this whole move here is a blow off bottom, I meant it. Blow off bottom, we're going higher, gets rejected at the 0, wants to come back up. So it's not going to go from here through it. So you get that quick kickback, which is represented by this, and you want to see it go through. What the rally I see coming is we're so bearish, we're bullish. That's what I see coming. And it should move like that. The more it moves like that, the more validity there is to a huge rally and then the gigantic flash crash in August. And so we'll watch it as it keeps going. The only possibility that I see is it depends what it does today, how high it goes today. The Nikkei is already up 1.5%. The DAX looks really good from last night. You want to see how high it goes? I think that we may have one last kickback next week, which might break this low. It would be a very, very violent kickback. This may have been that kickback that I'm looking for. I don't know yet. We'll have to see how strong this is. If we go above 4,000 today, I think it's possible this was it. If we kind of stay around 396, 397, it's possible to get within the first 3 days of next week, the first half of next week, a very sharp just drop down below here. You would end up getting UVXY to touch the 50 weekly. We never touched it. We got close, but we never touched it. And you're looking, if it pierces through it, you want to see a hard rejection. But this very well is showing extreme strength in a spot where it shouldn't be if it's bearish. So we'll see this play out. I think that's about all I really wanted to say. It's a lot of important things happening. Everyone is super bearish. And I see the mother of all rallies coming. The ARCs looks like they bottomed. Bitcoin was holding up in the midst of all this volatility. Well, why was Bitcoin not crashing? Because it's not a real breakdown. We want to see a fat MACD cross here, which means that you'd want to see a really strong activation within the next 5 trading days. Hopefully the next 3 trading days. You might get some sort of a kickback here, but that's what you're looking for. You're looking for really strong moves here with one last possible kickback. You're not selling this. You're not freaking out. You're either holding or buying. We're not selling this. We're not getting the recession this year. Okay, over and over and over again, I have to say the same stuff. Okay, hold. We're almost through. We're almost through. This was peak down momentum. So you could see these days here, peak down momentum. Get the retest, and this needs to absolutely rip. So we did a little bit of an overextension. Super toxic, super rough. But that's the name of the game, man. If you want to be in the market, you got to be able to understand this, see it, and hold through it. All right, GG's. Stay long. This is going to be fun this summer. Peace.